A business owner sends a wire transfer overseas. The amount is not small. It's the kind of payment that makes you check your phone every hour. He presses send, sees the confirmation, and expects the world to behave logically. But 3 days pass. The receiver says nothing arrived. The sender checks his bank. The bank says the payment was sent. The receiver checks his bank. The bank says nothing is received. And suddenly, two people are looking at the same reality from two different sides, and both sides feel like the other one must be lying. The sender starts feeling angry. The receiver starts feeling suspicious. And in the middle, the money becomes a ghost. Then the sender hears a phrase that sounds like salvation. SWIFT GPI. The bank officer says, "We can track it." And the business owner relaxes, because the word track makes it sound like the payment is a package moving through a system with GPS. But here is the truth. SWIFT GPI does not track money the way people imagine. It tracks messages. It tracks the instruction journey. And once you understand that difference, you will stop getting confused, and you will stop being vulnerable to fake tracking claims. My name is Sethtra, and today we are opening another case file. Not a conspiracy. Not a scam story. A calm, professional breakdown of how global transfers are tracked, what SWIFT GPI really does, and what it cannot do. Because the biggest danger in modern banking is not that payments fail. The biggest danger is that people misunderstand what the system is showing them. Let's start with the foundation. SWIFT is the messaging network used by banks worldwide to exchange financial instructions. It is not a bank. It is not a payment app. It is not a wallet. It is the language and highway banks use to talk. Before GPI, SWIFT transfers were famous for one thing. They were slow. And worse than slow, they were invisible. If a payment disappeared, banks would send investigations like old letters in the mail. Customers would wait. Sometimes for weeks. Sometimes for months. And most of the time, the customer would never truly understand where the payment went. So the world demanded a change. Businesses demanded speed. Regulators demanded transparency. And banks demanded a way to reduce chaos, complaints, and expensive investigations. That is where SWIFT GPI was born. GPI stands for Global Payments Innovation. The word innovation sounds like something new, but what it really means is something simple. A tracking layer. A transparency layer. A system that allows banks to follow the journey of a payment instruction across the chain. Now, here is where most people misunderstand it. They think GPI is a new transfer system. It's not. GPI is not replacing SWIFT. GPI is built on top of SWIFT. It's like adding a tracking system on top of the existing messaging network. Now, let's go back to our case file. A transfer is sent. The receiver says nothing arrived. The sender bank says it was sent. The receiver bank says nothing is received. So what is happening? In global transfers, money often moves through multiple banks. Not because banks want to annoy you, but because banks are connected through correspondent relationships. Your bank may not have a direct relationship with the receiver's bank, so the instruction travels through an intermediary. Sometimes 2 intermediaries. Sometimes 3. This is why people feel like money disappears, because the customer sees only 2 banks, but the system might involve 4. Now, here is the most important truth. SWIFT GPI does not magically speed up every payment. It makes the path visible. And visibility changes everything. Because when banks can see where the instruction is, they can resolve problems faster. Now let's define the core tool inside GPI. UETR. Unique End-to-End Transaction Reference. This is the tracking ID for the payment instruction. Think of it like a tracking number. But don't think of it like tracking a package. Think of it like tracking a conversation between banks. Because that is what it is. A unique reference that follows the payment message across the chain. Now, let's make this real. When your bank sends a payment instruction, the message carries the UETR. As the message passes through correspondent banks, each bank updates a tracker. They log timestamps. They log statuses. They log when it was received. They log when it was processed. They log when it was forwarded. They log when it was credited. And that creates a timeline. This is why banks love GPI, because it turns mystery into timeline. And in banking, timeline is power. Now, let's talk about the biggest misconception. People think GPI proves that money will arrive. It does not. GPI proves that an instruction is moving, and an instruction can move even if settlement fails later. This is the same truth we learned with MT103. Messages are not settlement. Tracking is not guarantee. Now, here is the part that most people don't realize. GPI tracking is not always visible to customers. It is mostly a bank-to-bank tool. Some banks show it to customers. Many banks don't. And that creates a psychological problem. Customers hear the word tracking but cannot see it. So they rely on bank staff. And that is why scammers can exploit it. Because when people cannot verify tracking, they can be lied to. Now, let's clarify what GPI can show in a real investigation. It can show the chain of banks involved. It can show where delays happened. It can show whether the payment reached the beneficiary bank. It can show whether the beneficiary bank credited the funds. It can show whether the payment was stopped for compliance. It can show whether the payment was rejected. And it can show how long each bank held the instruction. This is the biggest improvement. Because before GPI, a payment could disappear and nobody could explain why. Now, with GPI, banks can see the story. Now, let's return to our case file. The sender bank checks GPI. They see the payment reached an intermediary bank. Then it sat there for 2 days. Then it was forwarded. Then it reached the beneficiary bank. Then it was rejected. And suddenly, the mystery becomes clear. The payment didn't disappear. It moved. It stopped. It failed. Now, why would it fail? Here are the most common reasons. Incorrect beneficiary information. Name mismatch. Account number issues. Compliance screening. Sanctions screening. Missing purpose of payment. Internal bank holds. Or the beneficiary bank refusing to accept certain transfers. GPI does not remove these rules. It simply shows where the rule stopped the payment. Now, let's talk about the most important concept in global payments. Correspondent banking. A correspondent bank is a bank that holds accounts for other banks. This is how banks move money across borders without direct relationships. Your bank may have a Nostro account with another bank. The other bank may have a relationship with the beneficiary bank. And the payment instruction flows through those relationships. This is why GPI is so valuable. Because the more intermediaries exist, the more mystery exists. And mystery creates panic. Now, here is the emotional reality. When money is in motion and nobody can see it, people start accusing each other. The sender accuses the receiver. The receiver accuses the sender. The banks accuse each other. And relationships break. Businesses lose trust. Deals collapse. This is why GPI was created. To reduce chaos. Now, I want to show you the difference between GPI and a normal SWIFT transfer in the simplest way. A normal SWIFT transfer is like sending a letter through multiple post offices with no tracking. GPI is like adding tracking updates to the letter. But it is still a letter. It is not instant. It is not guaranteed. It is not unstoppable. Now, let's talk about the most dangerous misunderstanding. Some people believe that if a bank says GPI shows the payment is completed, it must be true. But remember, GPI is a reporting system. It depends on banks updating it correctly. It depends on the chain. It depends on the message flow. It is powerful, but it is not magic. Now, let's talk about what customers should do when a transfer is delayed. First, you should understand the timeline. Cross-border wires are not like domestic transfers. They can take 1 day. They can take 3 days. They can take 5 days. Especially if intermediaries are involved. Second, you should request a proper investigation from your bank. Not just a casual check. A real trace. Third, you should ask for the UETR if possible. Some banks provide it. Some banks do not. But if you can get it, it becomes the anchor for tracking. Now, let's talk about the uncomfortable truth that many customers hate. Sometimes the payment is delayed because of you. Not because you did something wrong, but because you did something incomplete. Purpose of payment missing. Beneficiary name mismatch. Or your bank's compliance team requesting documents. This is common. And it is not personal. It is the reality of global compliance. Now, let's talk about how scammers exploit GPI in the real world. They do it in 2 ways. First, they use the word GPI to sound professional. They say, "We have GPI tracking." They say, "The payment is in process." They say, The UETR is available. They use these words to create authority. Second, they create fake tracking screenshots, because most customers have never seen real GPI, so they cannot tell the difference. This is why the education matters. Now, I want you to understand a powerful rule. In global payments, you trust what you can verify. If you cannot verify it, you treat it as a claim. This is the same rule we learned with MT103. Now, let's close the case file with a practical summary. SWIFT GPI tracks the journey of payment instructions across banks. It uses UETR as the unique tracking reference. It improves transparency and reduces investigation time. It does not guarantee payment completion. It does not prevent compliance holds. It does not prevent rejections. And it does not turn SWIFT into an instant payment system. Now, here is the final truth that makes you powerful. If you understand GPI, you stop panicking. Because you stop thinking money disappeared. You start thinking in timelines. You start thinking in stages. You start thinking like a banker. And once you think like a banker, you stop being manipulated by delays, by fake confirmations, and by people who pressure you to act before verification. In the next episode, I will show you the scam version. How criminals use SWIFT GPI language to fake progress, stall victims, and create the illusion that money is on the way when it never existed. Because once you understand both sides, the system side and the criminal side, you become almost impossible to fool. And that is the goal.